Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast, and I am your host, Beau Eckstein, and on today's show, we're going to talk about how to submit a construction loan request and best practices. So let's get started. So you have a project you're working on, maybe the project is now shovel ready, the plans have been approved, the permits are pulled, or the permits about to be pulled, and you're building a multifamily project ground up. You're going to build 150 units, let's say. So one thing is before you got to that stage, right? Probably a few months, maybe 6 months before that, you're working on submitting your loan request to a funding source or a broker, capital mortgage advisor. So how do you put these packages together to get the best results? So let's kind of dive into best practices of submitting a loan request. So one is you got to work with somebody that understands construction, that understands what the lenders are looking for, and then putting together a capital stack that works. So one is, who are the sponsors? Who are the borrowers involved in this loan request? What do their financials look like? You're going to have to put together a detailed PFS or personal financial statement. You're going to have to put together a scope of work with a line item construction breakdown. This is all the costs of the construction project. Here's the floor plans and renderings. Here's a loan request executive summary of what we're doing here. And then once we get those details, we know what the construction budget is. We know who the sponsors and their net worth and what they look like on paper. And we have an idea of the stabilized value, because typically the developers on this will put together a 5-year pro forma from year 1 to year 5 showing lease up, and then we can kind of come to an estimate of stabilized value, and then that's kind of concrete. Once an appraiser does a full appraisal on it, they're going to come back with their opinion of value based on the cash flows of the property and their assumptions on cost to build and their different equations to figure out value of the property, right? So we know what the stabilized value is. We know what the construction budget is now. We have the personal financial statements of the sponsors. We have their resume showing their track record of what they've done in the past. It's always good if they've done similar projects. If they've never done any ground up construction and they're trying to do a 200 unit ground up multifamily deal, a little bit more challenging. Not to say it can't be done. It's just about how we structure these deals and put everything together. So that's critical. So once we get the rough package done, really what comes down to, as my job as a commercial mortgage advisor, is really to think, how can we put the best capital stack together? Are the sponsors coming in with enough equity where we don't need to layer a capital stack? It's just we can go out and get senior debt. We can get senior debt placement, right? So that's kind of the idea. If they're trying to get the highest leverage possible, is it possible that we put in a pref equity piece or maybe there's a different kind of capital stacks we can structure? So that's what we're going to look at. We're going to figure out what is the best capital stack. Okay, now as we're putting the package together, we put together what's called an OM, or an offering memorandum. And we do the same, just like a listing broker when they're selling a property puts together an offering memorandum. We do something very similar on the commercial advisory side. So we put together a summary, and then we take that loan package out to the market and we shop for the best deal. Usually we have them in our minds. We kind of know which banks or which lending organizations have the appetite for this type of product or this type of loan request.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
So right now with COVID, obviously, construction is being scrutinized, extremely hard. So developers that have done a project 2 years ago before COVID or last year, right? They were getting 75% loan to cost, 80% loan to cost. Well, it's different now. It's different, okay? Everybody's got to wake up and realize that banks are being more conservative. So that's when all these other equations of the part of the capital stack come into play, where we can structure and we can maybe get 60 to 65% of bank debt, and then we put in a pref equity piece, or there's other financing instruments available. And essentially, most developers come to us and they want the cheapest cost of funds and the highest leverage, right? Because that means they're raising less equity, which means, in theory, they're going to get higher returns for their investors and for themselves. So that's what we do. We help from start to finish. So we help when we get the initial call. This is the project we want to do. This is what we're looking for. What's the best way to finance it? And then we got to put everything together. We got to package it. We got to, do some models on the pro formas. We got to look at what the capital stack looks like together, what the debt service coverage ratio is going to be, right? Because everything's got to make sense. We got to look at what it's going to take to be leased up. There's a lot of variables, and a lot of people don't, they want things now. And unfortunately, construction loans are very difficult and they take time. In the past, a little bit easier. Now, things are getting more scrutinized. The other important items are, who's the GC? Have they done similar projects? Has your GC done projects of this scope, this magnitude? If all they've ever done is $1 million projects, and now they're building a $20 million multifamily property, right? We got to be able to sell it, right? We got to put the story together and make it very easy to understand. Then we take the loan request out to the marketplace. And if you're putting together a capital stack, I like to reverse engineer it, meaning, I'm going to go get the pref equity, or, maybe I'm putting my PACE piece together for it, right? So that's got to be structured before you go get your senior lender involved. And that makes the process a lot easier. So lots of moving parts in construction. And I love construction because it's just something I've always been fascinated by. And not that I have a construction background as far as ever building stuff. I've rehabbed lots of houses and small multifamily properties, but never built anything from the ground up, but been fascinating by the whole process. And so going back to kind of go full circle with this, one is we need to get the story up front. Don't pull any punches, right? Like, I'm going to ask you questions right off the bat, because I can quickly kind of qualify the conversation, the first call with the sponsor, the borrower. I can qualify and just really see, is this going to be a very tough deal to fund, or should it be relatively easy? Because it really comes down to the strength of the sponsor, not only from a financial standpoint, but from an experience standpoint. So if we get in the conversation early, we put these pieces together, and we can give you advice of, the best way to structure it, or maybe, the right, builder or general contractor to bring on, because that makes a huge difference. Because at the end of the day, people that, these associations and banks and funds that lend money, their number one, the number one thing to do is protect their investors' capital, right? They're protecting their investors' capital. So they don't really need to lend you the highest loan to value, the highest leverage, okay? In a perfect world, when the market's opened up and everybody's lending, yes, everybody starts going higher loan to value. But right now, especially, it's really about getting a good loan request package together, getting a good story together, taking the time to get everything dialed in, your financials, your personal financial statement, your tax returns, if you have any losses on some of your business entities. We need to know that up front, because at the end, when you get your LOI and then they start conditioning you, asking for a million things, that's the process. Working with banks, you're dealing with stuff like that. Now, there are other lenders that don't paper trail you to death, but you pay a higher premium, right? If you want to do like a private construction loan from a private mortgage fund, yes, it might be a little bit less paperwork, but you're going to be paying higher interest, and that's just the bottom line. So and sometimes you just need things done, and we can rush those type of deals. But if you're trying to get the best debt possible, start way in advance. Get in contact with a mortgage advisor that can walk you through like how to structure it from the beginning, and then get all your paperwork, even like beforehand. Get everything put into a secure maybe Dropbox folder, and set up subfolders, your tax returns for this entity, your tax returns for this entity, your personal financial statement, everything just identified and very easy. Makes my job easier, and then I can package it up. I put together the OM, and then I figure out who the top most probable lending sources will be, and then put all the pieces together, get an LOI on that, a letter of interest from the senior lender. Maybe there's an equity piece. Get a indicative terms on that, right? And then get the pref equity or the junior lender involved, because we got to get everybody on board, right? So there's lots of moving parts, and I just wanted to go over what it looks like, what you can prepare yourself with. But at the end of the day, like anything, the more time you put in the beginning, the easier it is down the road when you're trying to close. If you're unorganized as a developer or builder, it's going to make things a lot harder, right? And I know some of the developers and sponsors, they have 10, 15 projects going on at once. I mean, talking about new construction, right? So it's very challenging. I get it. I've been there, I've done that. But we gotta start early. And right now, with banks being more conservative, they're taking their time. They're really diving into the details right now. 8 months ago, different story. People were looking to lend their money. The economy was great. There wasn't like the worry there is in the world right now. But now is a different time, and it's a different cycle in the market. And I don't blame banks, right? It's their job to scrutinize stuff, right? But what I do is I try to make it easier on everybody. I want to make a win-win. I want the borrower or the sponsor to be happy, and I want the lender to be happy, and match them up together, right? Maybe we can do more business in the future. So that's really how you want to kind of think about getting your construction projects funded in the future. Thank you for joining us on another episode, and please share this podcast, and I hope you enjoy. I like to talk about relevant things in the market, and I will continue to bring you information on lending and discussions with real estate investors and developers. So hopefully you can take some of these nuggets and go out there and do some deals. Thanks a lot. Bye-bye.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.